If you're looking for Bitcoin-like returns, you don't need to change your name. Just learn about options. So Dan is going to break it down for us over at the Plasma. Dan.
Yeah, so all this talk of doubling, I think, is pretty speculative. And all this talk about cryptocurrencies moving around like this is also pretty speculative. And we make this point a lot on Fridays at 5:30. On what show, Guy?
Options Actions.
Yeah.
I love that show.
Yeah.
I've been on it a number of times.
Buying options, okay, being directional, long premium, you got to get a lot of things right to make money. You got to get direction, magnitude of the move, and timing. But a lot of people like to buy options for two reasons. They like to do it to define their risk, and they like to do it for leverage. But what is a call? Let's just talk about buying a call, making a bullish bet. That's why you would basically buy a call, and it gives you the right to buy a stock at a certain period of time at a certain price. So those are the three main reasons why you would be buying a call option if you're looking to kind of look to leverage some sort of sharp move in a short period of time. When we think about this sort of stuff, I mean, there are not too many risk assets where you could get doubles, and that's what we've been talking about with a lot of this crypto stuff. But when you're buying calls, short-dated calls, for instance, into events, you have the potential to do that. I want to look at Bank of America right now. It's going to report earnings next week on January 17th. This options market is implying about a 2% move in either direction. Today, when the stock was trading at 30.45, you could buy the January next Friday expiration 30.5 strike call for 50 cents. That call breaks even at 31 bucks, okay? And that's when you would basically be even on next Friday's expiration to the upside. But to get a double, you need a 31.5. That's up about 3.5%. To me, that's taking a speculative view on a short-term event, being long premium, defining a risk.
Hey, Dan, I got a quick question for you. In terms of the options world right now, what you're looking for, are you more often finding yourself long calls, short calls, puts? What are you doing?
It's a great question, Pete. And you know, obviously, with volatility so low, option premiums look pretty cheap, but they're actually pretty expensive because stocks aren't moving around a lot. They're not particularly volatile. So if you're not earning out that move over that period of time, it's a hard way to make money, even being bullish in an upward trending market. So to me, you got to get all those things right. You got to get magnitude of the move, timing, and direction right on long premium directional trades. And it's a tough game. It's speculative.
For more options action, check out the full show Friday, 5:30 p.m. Eastern Time.